Good morning and welcome to NCBA Money Mastery, where we teach you how to make your money work for you. My name is Willy Mahumu. Here at NCBA, we are excited about numbers because I'm sure by now you know the numbers that matter to you always matter to us. And talking about numbers that should matter to you, here are some numbers you may want to consider around retrenchment and retirement. Number one, you're set to enjoy up to 150,000 shillings paid to you monthly within 3 months upon retrenchment as part of the NCBA income protector solution. Secondly, all NCBA customers aged 55 and above can open our WISA account, which, unlike other traditional current accounts, enables you to earn an interest on your money. And finally, did you know that over 70% of Kenyans do not have a steady source of income upon retirement? A scary thought, right? And that marks the beginning of today's topic on the big R. Whether you're being faced by retrenchment or retirement, there is one key thing that is at stake here: your income. It's far too common to find yourself asking questions like, how will I survive? How will I pay my bills? What does the future even look like from here? And how can I maintain my current lifestyles? If these thoughts have ever crossed your mind, I have good news for you. You're not alone. We are all thinking these tough thoughts and tough questions because, hey, at the end of the day, most of these are inevitable aspects about life. Now, to help us see some light on today's topic on the big R's, retrenchment and retirement, is Mr. Waithaka Gatumia, the CEO of leading wealth creation education company, Centonomy. Waithaka, karibu tena.
Thank you so much, Willy. We're so excited to partner with NCBA as your education partner. This is to help people with knowledge so that they can navigate life. And Willy, I loved your introduction, the way you said, we are thinking about these things. We are asking these questions about how we will survive in retirement. Willy, today I want us to move from asking questions and thinking to taking action. Hopefully that's what we'll achieve today.
All right, thank you, Waithaka, once more. And let's start by looking at the definitions between retrenchment and retirement. So please define them and help us understand the difference between the two.
Sure, Willy. So retrenchment is the act of making an employee redundant. This is when a company will let go of some of their staff members in order to cut down on costs, and maybe it's a change in strategy. So unlike being fired as an employee where you did something and possibly that's what got you to lose your job, when you're retrenched, it had nothing to do with you. It was a management decision. And it is usually unexpected, especially from the employee's perspective. And so we need to think about what would we do, and not just think today, remember, take action. We need to think about what we would do and act if that was to happen. Retirement, on the other hand, is different. It's expected. It's something that we all expect to do. This is the action of leaving one's job or ceasing to work, all right? So in most countries, there is a retirement age. And so each of us kind of know there's a time in which an organization will let you know it's time, you have achieved the age, and God willing, you have accrued some benefits which you'll be able to leave that organization with and to go and begin to live off your assets. But the thing about retirement is that you need some resources in order for you to stop having to work. And so if you get those resources early on in life, you can actually retire earlier. But you know what? The reality is this. Retirement means different things for different people, Willy. Each one of us is going to have to navigate that space as best as we can, and also in line with our own personal goals and our ambitions. But here's the thing. We have to not just think about it now, Willy. We have to take action to make sure that we have an abundant retirement. Some of us may have to work. Some of us will have the resources that are paying us. Some of us will continue to work because it's our mission and our passion. It's all different for everybody, but we must make that decision and plan for it, Willy.
Okay, Waithaka, so perhaps let us look at the two separately, and we can start with retrenchment. Yeah. The past 1 year has been really difficult for many companies, and so most of them had to retrench their staff. The effect was particularly severe in the tourism and hospitality industry. And you've said it best, most of these things are unexpected. So how can one even plan for the unforeseen? For instance, looking at the pandemic, no one could have seen it coming. So how could have anyone even prepared for such a thing?
Yeah, and Willy, I'm so grateful for this opportunity for NCBA and for Centonomy to work together to hopefully help people in times like this, because a lot of people, not just in this country, but around the world, are really suffering at this moment simply because of this pandemic. God willing, we get out of it as quickly as possible. But guess what, Willy? And here's the thing. Here's the thing. We have to accept the reality of it. Emergencies come. Things change. Retrenchment can happen even if there was not a pandemic. So we have to take the attitude of preparation for the worst. You know, you've heard that saying, you know, prepare for the worst, but hope for the best, right? And so the best thing to do, especially around this idea of preparing for, and we ask, God forbid, retrenchment, is to have a contingency plan. And the essential idea is this: if it were to happen, a what if plan. If it were to happen, what would we do? And one of the best tools to navigate that is what we're teaching at Centonomy for over 12 years, which is to have an emergency fund. So this is savings in cash form, savings in cash form that you can access should you miss out on your income or should a major emergency come in your life. And for most people, retrenchment is quite a huge impact on your life. It's a huge emergency. And so if you can have some money, cash available for that emergency, then you can be able to navigate that period. At Centonomy, we recommend that you have between 6 to 12 months of your income in a savings account or in an account that is easily accessible, because you don't want it hidden somewhere where you have to sign so many documents, you have to jump through hoops, you have to wait. If you don't have an income, you need cash, and you need it so that you can be able to continue your life. So cash available that will allow you to continue at your current rate. It reduces the pressure on you and your family at that moment so that you can make good decisions on what you're going to do next. So having an emergency fund does that for you. It allows you some period of time with less pressure on your mind to make good decisions as you figure out, what am I going to do next? Yes, Willy.
Okay, Waithaka, I know many people who are watching us today, they love what you're saying. They love the idea of having an emergency fund. But I also know that there could be some people out there who are thinking or saying this: I barely have enough money to meet my daily needs. So how am I expected to have money to save or build an emergency fund? And I would like to hear what your response would be to that kind of inquiry.
All right. So Willy, in this country, we've got a lot of people who are struggling, who are living below the poverty line, where their daily concern is not what's happening on social media, but where do I get my next meal? And for such people, we cannot stand here and begin to say, you must save, you must. No, no, no. For such people, we need to do better as a society to make sure we can raise our people out of poverty, build jobs, start those businesses, employ people so that they don't have to worry about those things. Because at that level, saving is not a priority. Food, shelter, education is your priority. Those are the essentials of life. But I want to speak to people who have the ability and who are watching us now on their phones, who are watching us on their laptops. They have the ability to do so. I think for each one of us, we have an opportunity to take control in our lives. And I'm going to challenge us that even though your money might be tight right now, you had a little bit extra that allowed you the data to be able to access this show. That means that you have some space. You have some time to be able to watch this, and you're not out there just looking for the next meal as your main priority. So I'm going to say this: for each one of us, we can do better in terms of our personal financial management. And I think if we take control and begin to do these actions, they can prepare us for emergencies that come. Even at the lowest income levels, when you talk about people who are earning minimum and just around minimum wage, there's some things that you can think about. So we were talking with my wife about our house help. There was one day we couldn't reach her, and we called her a couple of times. And every time we called her, we had a different ringtone on her phone. And they're all lovely songs and encouraging words, all those things that you listen to. But it struck us that she may not have seen it, and maybe you've not seen it, that she had over 5 ringtones on her phone. And each one of them was costing her anywhere between 1 shilling and 50 cents and 2 shillings 50 cents. So that's almost 10 shillings a day that was coming out of her pocket that she could have thought about. In a week, that's a loaf of bread. In fact, 2 loaves almost. So each one of us has some space in our income. If you are earning an income, that you can begin to see, how can this help me in an emergency? Willy, each one of us, we all have these ideas, these struggles in our lives. If we can take control, we can begin to prepare ourselves for emergencies and actually put aside some savings.
Right, Waithaka, let me tell you what I like about what you've just said. I think what you've just said is we're not necessarily asking people, when we're talking about the emergency fund, to take food away from their families. What we are saying is probably you want to look at your expenses, and I like the example you've given about a hustle, because those are really things that you may not really think that, okay, I spend this amount of money weekly, maybe on a skis at you. But there could be those things that you can tweak, and probably they'll give you some room for you to start building on an emergency fund. And still on the emergency fund, Waithaka, do you have practical steps or ways in which someone can start building on their emergency fund?
Willy, here comes the broken record, but I think it's one that will help us. I'm telling you, we have to hear some of these truths over and over again for them to land. So let this one land now for us, Willy. It starts off, any kind of personal financial management journey starts off with knowing where your money is going. And so I'm going to encourage everybody. Number one, track your expenses. See where your money goes every month so you can make some decisions on how much you can put aside, how much you can begin to save. And maybe you might find even some things that you are shocked that you're spending that amount of money on. Like we said about the ringtones. Some people might be shocked. What? In a year, you're talking about thousands of shillings on a ringtone. Anyway, number two, once you've done that, set a target. Remember, I mentioned earlier that we said 6 to 12 months. Whatever that target is, if it's 6 months for you, if it's 12 months, even if it's just 1 month of my monthly income in a savings account, that's a target. And so you say, if I'm earning 20,000 shillings, if I had 20,000 shillings in a savings account that I can access in an emergency, that will take care of me for 1 month. And for 1 month, I can begin to organize myself. There's less pressure. I know what I can do. And you know what? In an emergency, you can even stretch that 20,000 shillings beyond 1 month. But here's the thing. Set the target. Say it's 1 month, it's 6 months, it's 12 months. Obviously, we recommend more time because it's usually difficult to organize yourself. But set that target and then begin to put small amounts based on your tracking and your budget, small amounts towards that saving. Then number three, it will take you a few years to build that fund. I wanted to mention this because sometimes people are like, how can I do this? It's one of the projects that's not going to be 2 months, 3 months. It'll take you years. Because guess what? It's the entire monthly expense that you have that you're trying to build multiple. But aren't you spending already now on rent, on food? So where is this cash going to come from? It's the difference that's left over. So Willy, excuse me, I want us all to begin to think long term. It will take me 3 to 5 years to build a 6-month emergency fund. So don't be worried about rushing into it. Take your time, you'll get there as the plan works out for you. Yes, Willy.
All right, Waithaka, and on that breath, I'd like to just encourage our listeners to approach NCBA, open a savings account, because Waithaka has talked about setting a target for yourself and starting to build on that emergency goal and monitoring it. And he's also talked about the time element, that it's going to take some time probably. and you want to somewhere where you can easily see how your funds are growing. So today you had 10K, tomorrow you have 12K, 15K, and you're able to slowly but surely see that you're getting closer and closer to having that emergency fund that will take care of not only you, but your family or the people that depend on yourself. So please think about having a savings account. It will also help you separate your funds from what you put in the current account, which are supposed to help you with your daily needs. And it also helps you to avoid the temptation of utilizing those funds, because the savings account should be something way separate from what you put in your current account. And Waithaka, coming back to you, do you have any additional tips that you can share with us on how someone can prepare for retrenchment?
Yes, and this is to all the employees like myself who are listening to this. If you are an employee, please do not be comfortable with your paycheck. It is time for you to think, how do I build other sources of income? You can do a side hustle. Your hours at work are 8 hours a day. What are you doing with the rest of your time? Can you do something else? Can you fund your spouse to do a business on the side so they're able to grow? Can you begin to build income earning assets? All the bankers I'm speaking to you right now, you have access to cheap credit. Can you build other rental properties that can be putting money in your pocket? This is the time for you to think, how do I generate more income? And listen, it's all about managing our time and our energy. On Saturday, please, we need to rest. Sunday, we need to rest. But you don't have to rest for 16, 17 hours on Saturday. Take 2 hours of that time. Go and look at your plot that you have not seen. See, what can it do? What can it generate? So look at generating other sources of income so that you're not comfortable with your paycheck, Willy.
Wow, Waithaka, that's some very sound advice coming from you. And I think on behalf of all bankers, we hear you loud and clear. And thank you for being, very honest with us and with all the employees on how best we can prepare for retrenchment. I think there's a lot of information that has been shared here, and we may need some time to just let it all sink in. So we'd like to go for a quick break. And when we come back, we'll be looking at retirement. But before we do that, Waithaka, do you have a small teaser on retirement before we go?
Write this down, everybody who's listening to me. The key to a financially free retirement is income or cash flow. We'll talk about that, Willy.
All right, can't wait to hear more on that, Waithaka. So to our dear audience, when we come back, we talk about retirement. Also, we'll be taking that opportunity to look at your questions. Please send any questions you may have on our chat box. These are very interesting topics, so I believe you may want to contribute on what we are talking about. So we'll be with you shortly. Please do not go away. Thank you.
With our NCBA Bank Home Loan, we can finance up to 105% of your mortgage and give you a repayment period of up to 25 years.
Daddy, that is 25 birthdays for me in our own home. Many suppers together. Lots of laughter with mommy.
We know that it's not about the house, but the many memories made in it. Get an NCBA home loan with up to 105% financing. The name is NCBA, and the numbers that matter to you matter to us. NCBA Bank. Go for it.
NCBA Money Mastery from the bank that says go for it. We have been speaking to Mr. Waithaka Gatumia, the CEO of Centonomy, our knowledge partners, on the big R's, the topic retrenchment and retirement. And before we went for the break, Waithaka talked comprehensively about retrenchment, and he left us with a small teaser. And Waithaka, let me see if I remember exactly what you say, but you said something along the lines that the key to a financially free retirement is cash flow, something along those lines. Please tell us more.
Got it, man. Cash flow or income. What you want to have is cash coming to you, not just assets, but assets that are generating income. You see, Willy, before retirement, you were funding your life from your income. If you are employed, that salary that you're getting. If you are busy in your own businesses and the things that you're doing, that income that was coming. And so when we transition into retirement, when we're doing less work and you want to rest and enjoy the benefits of what you've worked so hard for. Now you want your assets to do the work for you, not you. You want your assets to be the ones that are generating income. Now, here's the difference, Willy. I can have assets, they have value, but they don't put money in my pocket. They're not generating an income. Let me give you an example. Maybe you have a sofa set, the sofa that you're sitting on right now. It has value, but it's yours. You sit on it. You have no intention to sell it or to rent it to anybody else. And so even if you put it in your assets and say, now I have a sofa set worth 20,000 shillings, that 20,000 shillings is not putting money in your pocket. So in retirement, you want to have assets that are going to be putting money in your pocket, generating an income. So not just assets that are out there that have value, but they're actually generating an income. You see, Willy, here's something that you'll have heard being said before, that we have many people who are retiring when they're asset rich, but cash poor. So don't end up in that group.
All right, Waithaka, you keep dropping these interesting phrases and you've just done it again. So you've said asset rich, but cash flow poor. Please expound on that.
Okay. So they have assets like the ones I was describing. You have land. You have a home that you live in. You have a car. All these are items that have, and in your home, all the items that are there, all these things have value. They have monetary value. You can value them and say your home is worth 10 million, your car is worth 500,000, your sofa set and furniture is worth this amount, your land out there that you own, you have the title deed, is worth 1 million shillings. Good. But none of those items is generating cash. They have value. And so the value is locked in them. The key in retirement is to unlock the value that you have in your assets. So what you want to do is to build assets so that you can be able to generate a cash flow and income. So if you don't manage to build income earning assets by the time that you reach retirement, then you will need to make some changes and need to begin to think, how do we do this? How do we manage our lifestyle? It's by looking at the assets you have, including your time, your energy, your skill set, to try and generate income. So there are three solutions, Willy. Number one, and this one everybody has to think through, is maybe you may be forced to reduce your lifestyle. So now look, you adjust your spending downwards to fit, for instance, for employees, your pension. So your pension will definitely not match the amount that you are earning on a monthly basis. It'll be a part of that. So maybe you might have to adjust downwards to fit into that cash flow. Now, let me be honest, Willy, this is the hardest one to do because changing your lifestyle is very hard. And so you may want to think about the other two options that are there if you follow along with me. So number two is to reorganize. If you're really close to retirement now, it is time to reorganize your assets and to say, okay, so I have land. That land is not generating an income or cash flow right now. What can I do? Can I lease it? That way it's generating an income. Maybe that will not be enough. Okay, what if I do some business on it, some agriculture? Okay, do I have the capital to do that? Is that going to do it? If it does, wonderful, good. If not, then you look at it and you say, okay, how do I change this asset into an income generating asset? So you look at the value of the land. You can sell that land. Don't use the money. No. It's not selling to use the cash on a daily basis. No, you sell and purchase an income earning asset. It may be a small rental property that you can use that will begin to generate rent for you. It may be taking that and putting it to a government bond, which generates a cash flow for you on a regular basis. So what you're doing is reorganizing what you have. For some people, that reorganization may come even closer to home, your home. If it is a large property, you have a 2-bedroom, a 3-bedroom, and you're only using 1 bedroom for you and your spouse, you may say, you know what? If I sold this and bought 2 smaller places, one for us and one to rent, that generates a cash flow. or that extra amount, put it into another income earning asset. The idea, as we said earlier on, for a financially free retirement is what? Cash flow. Because many people are living in their own when they retire, but they have no cash even to maintain that house. We don't want to end up there. And if you're there, how can we begin to reorganize? And finally, number 3, listen, for many people, as you heard, it may mean that we continue to work even in our retirement, that we're able to work through some of these processes so that now we're using our skills, our energy, our time to generate cash. So it's not just sitting back and waiting now for money or for our assets. We're using our non-financial assets, our skills, our time, our energy to generate an income. Willy, we have to address this, and we cannot just talk about it anymore. We have to take action if we're going to have a financially free retirement.
Very well put, Waithaka. Very well put. And I think we have covered the big R's now. We have covered retrenchment. We have covered comprehensively retirement. And it's that time of the show where we go and look at the questions from our audience and see what do they think about what we've just discussed here. So allow me to go right into the questions. And the first question is from Richard. Thank you for being the first person to contribute to today's show. And Richard is asking, what tools are available for retrenched customers? Waithaka, I'll attempt to this, and then if you have anything to add on it, I'll let you also share your thoughts. So number 1, Richard, we talked about when we started the show about the NCBA Income Protector solution. And what we said is this solution is there just for you, because we realize that many of our customers oftentimes, unfortunately, get themselves in that situation where you're being retrenched. It's not something you could have foreseen, like Waithaka has put it. And remember, the needs for you as an individual and for your family are still there. They're not going anywhere. So you still need money, but your most primary source of income has sort of been cut short. So the Income Protector solution is there to ensure that when that happens, or if that happens, at least you are paid 150,000, which is the minimum, for 3 months upon retrenchment, just to ensure you have your cushion for 3 months, 90 days, for you and your family to get back on your feet, for either for you to look for another source of income, or for you to have at least reorganized yourself in such a way that you can move forward, comfortably move forward with your family. And then also looking at the other solutions that we often try to bring to our customers. We've talked many times on this show and many of the previous series or episode about investment products, because what we realize is if you have invested early, you are better placed to be more prepared even when you're faced with something unforeseen as retrenchment. So I'd encourage you to visit any of our branches, talk to our relationship managers, talk to any of our representatives. We'd like to know what is your current financial position, and then with that, we'll be able to advise on the most suitable investment products for you to take up. And with that, we know that you will be essentially more and better prepared, better financially cushioned against anything that may come your way or something like retrenchment. And then finally, remember, that's why we have Centonomy and shows like this, because we wanted you to learn from the best in the business. We wanted you to get the right information so that you can prepare yourself early. Waithaka just talked about how oftentimes it's preparation that sets people apart, and we want you to be prepared. And for you to do that, we want you to have the right information. So Waithaka, I don't know if you have anything to add. If you don't, we'll go to the next question.
Well, Willy, I will just add that, as I said, this partnership between Centonomy and NCBA also gives you a benefit as an NCBA customer, also for the discounts that we offer for our programs around personal financial management at Centonomy. So this is a great time to be investing in yourself so that you have the knowledge, the understanding of all these various investments that are out there, and begin to put together a plan. As I mentioned in our classes, we actually have a tool called the Emergency Fund Plan. So you're able to put in the numbers that you're hoping to achieve and how your saving plan will work towards that goal. It's all about organization. And so for those who are interested, definitely you can reach out to us at Centonomy through NCBA as well. And the programs that are coming up, we've even got some that are starting next week here, next week in October here. So it is time for you to invest in yourself.
All right, amazing. Let's go to the next question, and this is from Daisy Njambi. Daisy, thank you for tuning in. We appreciate your contribution to today's topic. And Daisy is asking, I work short-term jobs. How do I plan for retirement? That's an interesting question, Waithaka. Daisy is asking, I work short-term jobs. How do I plan for retirement?
So Daisy, thank you for a great question, because this affects a lot of people. So here's the idea. You may have an irregular income, but you have regular expenses. So your expenses are rent, food, education for your children. Those things come regularly, even if your income is irregular. So the budgeting process is still the same. Putting together a spending plan is still the same. You still need to work out, where does my money actually go, so that you can figure out and be able to see in 1 month, this is what I require. So that when that irregular income comes in, it takes care of you for more than 1 month, God willing, as you move forward. What does this mean for your retirement, Daisy? It means that when you retire, those regular expenses will still be there. So even from your irregular income, you can still be saving and investing towards assets that will pay you when you retire. Thanks, Willy.
Right. Next question is from Eric Githaka. Eric, we are happy that you're contributing to today's show. We're happy that you've joined us. And Eric is asking, do banks offer personal finance or non-financial advice or guidance to retrenched customers? I'll repeat that. Do banks offer personal finance or non-financial advice or guidance to retrenched customers? And Eric, I'd just like to return you to my response on the first question from Richard, which was basically, yes, we do. Yeah. And normally that's why, but we would appreciate it if you come to us early. Yeah. Come to us today. Let us be able to work a plan for you. And what we try to do is more or less work on an investment plan so that you have finances, yeah, and you are able to maximize on the financial resources accessible to you right now, so that even in the event of retrenchment or any other thing that is unforeseen that may potentially damage or harm your financial area, at least you're better prepared. So I just like to repeat, we have an income protector solution. And probably what I may want to add is you're only required to pay about 305 shillings monthly. Okay. Annually, it's about 3,000 to 4,000 shillings. And you get to enjoy all those benefits that I talked about, 150,000 paid to you monthly for 3 months upon retrenchment. And therefore you find yourself better cushioned overall. So please talk to us. You can drop in your question on the chat box. You can also call us on the numbers on your screen, and also walk into any of our branches, and we'll be able to guide you more on your personal situation on how you can protect yourself and your family. I'll go to the next question, and this is from Ivy Roby. Ivy, good morning. Happy to have you on the show. And Ivy is asking, what will happen if I retire or I'm retrenched and I still have a debt? What will happen if I retire or I'm retrenched and I still have a debt?
All right, depending on the terms and conditions that you had on that loan, there may be some reprieve or some time that you might get off in terms of the loan repayments in such situations, but you still owe. And so what you want to do, as we said, as you build your emergency fund, is to take care of your lifestyle costs before your retrenchment, so that you're saying it is the total amount. I want to jump ahead, if you don't mind, Willy, to another question and link them together, because Thomas, I think it's Thomas Waireri, was asking about, is the 6 to 12 months of the emergency fund, is it a gross or net figure? And so we suggest have it as a gross figure, because all those costs are included there, even those deductions that were going towards your loan. So if you have an emergency fund that can cater for that during that period of time, it gives you an even better position to be in. Plan for a gross amount, not just a net amount. That will allow you the freedom even to begin to continue those payments on the debts that you had before you retired. But for some loans and some institutions, there may be some space that you can negotiate based on the terms and conditions. Thanks, Willy.
Maybe just to jump in from a bank's perspective. So it's a two-part question. Let me start with retirement. What we normally do, Ivy, from a bank's point of view is when we are calculating a loan, we look at the tenor of it will be dependent on when you're going to retire. Yeah? So if the retirement age is, let's say, for instance, 60 or 65, we'll ensure that the loan tenor does not go above that. And that's because we do not want to put you in a situation where you have retired, you don't have a source of income, and we are asking you for funds. We want to have a more humane approach to this and ensure that by the time you're retiring, at least your loan has been cleared. Considering the fact that, assuming that you're still going to have an income up to the point of retirement. However, now let's look at the other side of the coin. If let's say you are retrenched, if you're retrenched, what normally happens is all our loans have a credit life cover. That credit life cover is an insurance per se, which helps you in that if you're retrenched, 9 months worth of your monthly repayments will be paid by the insurance company, which means you'll have a total of 9 months for you to plan yourself. And I believe you'll agree with me that that's enough room for you to just reorganize yourself, mostly get another job or get another source of income and be back on your feet and able to repay your loan. So I believe that answers your question, Ivy. Let me go to the next question, and this is from Andrew Mutua. Andrew, we are happy that you're watching today's show. And Andrew is asking, what is the best way to manage a lump sum payment in retirement? I like this question, Waithaka. What is the best way to manage a lump sum payment in retirement?
It is still the same answer, Willie. The best way to manage all your money is with a plan. It is with a plan that you know what you want to achieve. So a great place to start, Willie, when you receive a lump sum, and sometimes when people retire, depending on what job they had, they receive money as a lump sum, a large amount, not as a pension which comes on a monthly basis, but you get a large amount. Sometimes these are amounts you have never seen before in your account. It can be millions of shillings. A good thing to do, first of all, is to stop. Put it aside, think before you start spending. Put that money somewhere, maybe in a fixed deposit account or somewhere where you can get a bit more return as you begin to think, what are my priorities? After that, come back to the principles we've talked about today. That what is going to sustain you during retirement is not eating that cash, but rather putting that cash into an asset that will generate income. So when you've packed it aside for a while, it gives you time to think, which asset am I going to go for that will take this money, absorb it, and then begin to give a return as a cash flow to me, to give me some money coming from it, rather than eating that money as it comes out right now. That's usually the biggest issue that you face. You start taking cash out of that lump sum thinking it's going to be there forever, but it doesn't last forever. You need to put it into an income generating asset, Willie.
All right, Waithaka, and now that you've talked about eating that cash, there's a question here very similar to that. And this is from Priscilla Atieno. Priscilla, thank you for your question. I love it. Priscilla is asking, how can you avoid the temptation of touching your retirement funds with the increasing demands of life? I feel that's a very honest question. I repeat that. How can you avoid the temptation of touching your retirement funds with the increasing demands of life?
Willie, this one is something that we are all grappling with and we're trying to figure out. But what I've found to be most effective and where you find people with the highest level of discipline is when that person has a personal goal or target that they're trying to achieve. Willie, I always use this example of athletes. So athletes, they know if they eat unhealthy, if they don't wake up and train, when they show up on the pitch, when they show up on the track, they will be defeated. And so because of the prize that they're aiming for, because of that target that they're looking at, they make decisions now that are much easier, because it makes it easier because you know I'm not just staying away from that money today just for the sake of giving myself a hard time. No, I'm staying away from that money because it will come back to me and serve me later on. Let's make this short term, Willie, because I can see all the young guys who are saying, hey, retirement, 30 years, 40 years. I don't want to think about those things. So let's make it closer. Let's look at December this year and the holiday that you're thinking about taking. So it becomes easier to save the money if you know the size of the holiday that you want to take. So let's say you want to go to a coastal city where you're on the beach and enjoying yourself. If you know it's going to cost you, let's say 30,000 shillings to go to the beach, then putting aside 10,000 this month, October, November, and December 30th, it becomes easier. The discipline comes there, and I'm not going to touch it. Why? Because I know the reward is coming later. So always link your financial decisions to a personal goal, something that you want. Then it will make that decision of, hey, I'm not touching that money because guess what? It's for my children's university. Hey, I'm not touching that money. You know why? Because guess what? That's the money that's going to pay for my house. Ooh, I'm not touching that money. Why? Because that's the money that's going to pay me when I'm retired just to look at my field and to enjoy. Link it to a goal, Willy.
Next question is from Mary Wamaitha. And Mary is asking, I am about to retire and I have no assets. What can I do?
Wow, Mary, this is the time for you to wake up. It is never too late to begin. And listen, I wanted to mention this at the end, Willy, but I think I'm going to mention it now. Retrenchment is not the end of the world. Retirement is not the end of the world. You still have life to live. And so long as you have life to live, apply yourself to it, apply your skills, your ability, your ambition, and you can achieve so much. Now, even as you get closer to retirement, guess what? You have an asset that a 20-year-old does not have. You have life experience. You have experience in your work. If you applied that in a different space, if you got some funds and tried to start a business and start to work on that, especially a business in the area that you have experience and knowledge, then you can get a return. It is never too late, Willy. You can always find a way to generate what you want. I think, Willy, the last time we gave the example of the founder of KFC, who started KFC in his 60s, and he built it into a multi-million-dollar company. What's stopping you, even you in your 60s? Thanks, Willy.
All right. So our next question, Waithaka, and this is from Paul Mwangi. Paul is asking, are there risks in starting a business after retirement? And what would you advise someone to consider before starting a business with retirement funds?
In business, and this is the thing that we must understand, there are no guaranteed returns. That is why we say it is a risk to get into business. Why? Because there's no guarantee. But guess what? In life, what is 100% guaranteed on this earth? Most of us cannot name even one thing. So it does not mean that you cannot start a business when you get into retirement, but the risk is higher. Why? Because as you put money into that business, you're taking away from other possible income earning assets that could be there. But that business can turn out to be one of those income earning assets. And so you want to get into business in an area that you understand, that you're clear about, and that you have set good, clear targets for that business, so that you're clear on how much you want it to bring in, how much you expect to make over a period of time, so that it's driving you forward to achieve those goals. So the risk here is that if you get into a space you don't have experience, it can take time for you to learn and to get into it. And in that period of time, you need to think, how am I going to survive during that period of time? So you want to use your skills, your abilities, your knowledge, what you have acquired over those many years to make good decisions at that point, to get into areas that you understand and you're willing to build. Again, Willy, no hard and fast rule. You can start something new, but just understand the risk. The risk is the business may take time to return a profit. You need to think, how do I survive until that point comes?
Okay, all right. Waithaka, as we go to our last and final question, and this is from Odette. I hope I've pronounced that right. Odette, thank you for your question. And the question is, how does the income protector product work? And can I use that to pay off my debt in retirement? So I'll take that question. Let me answer the first part. How does the income protector product work? So the way it works is more or less like an insurance policy, if I may. Allow me to use that word. And basically all you'll do is once you sign up for the solution, you'll be paying at least 305 shillings monthly. You can choose to pay it annually to make it easy. Since also it's not a very high figure, it will become around 3,000 to 4,000. And then once you've paid, if there is a retrenchment case, all you need to bring us from your employer is the retrenchment letter, and we'll be able to now apply, make that claim, if I may, and then monthly we'll pay you 150,000 for 3 months, which we do that to ensure that at least you have enough room for you to get back on your feet. Remember what we've covered in today's show, that often the main challenge is you're retrenched today and your needs are still there. So you still have to pay school fees, you have to buy food, probably you are a guide, you take care of maybe relatives or family, and all these are still on your shoulders, even though your income has been sort of cut short. So that's how it works. And can you use it to pay your debt? Yes, because at the end of the day, we give you the money. Yeah. So how you use it will entirely be dependent on yourself. And therefore, we do not limit the way you use the funds to be credited to you. And then now, probably as you reorganize your finances, you'll know what to allocate where. All right, Waithaka, that marks the end of the Q&A session. Do you have any parting shots for our audience today?
Yeah, Willie, let's live life on purpose. No one is going to make a financial decision on your behalf. So you take the control of your financial planning. You decide what you want and then make the decisions that are going to get you to that point. If you have a goal, if you have a target in front of you, it will drive you in the right direction. But if you're just living life, just hoping things will work out, yeah, we may find struggles along the way. So this is a good time to invest in yourself, invest in a good class, read a good book that's going to help you, empower yourself with the knowledge to make good financial decisions. And sitting in for a session like this and watching till this point, I think you're doing a great job. Keep at it. Thanks, Willie.
Thank you very much, Waithaka. And I must say the information shared here today has been very enlightening. So thank you for your very good insights. And to our audience, thank you also for your questions. You've asked very good questions today. And I believe it has helped us understand better the whole topic of retrenchment and retirement and how to prepare ourselves. Because this is something that affects everyone. And I think no one is exempted. Anyone can be retrenched, anyone, all of us, so especially if you're in employment, will come to a point where you have to retire. Yeah. And it helps when you are better prepared. So unfortunately, that's all the time we had for this episode of Money Mastery powered by Centonomy. I'd urge you to visit our website at ncbagroup.com to learn more about our products and services. You can also call the numbers on your screen, and better yet, like, follow, and subscribe to our social media handles. I've been your host, Willy Mahumu, and until next time, when we look at another set of numbers that matter to you, goodbye, please stay safe, and have an excellent day.